Well, hello, Mavericks. It's Joe. Let's do a market roundup for the 11th of April. Let's get into what we had seen coming out of the holiday, and not a whole lot. Yesterday was a little bit bullish. Today was bullish, but we'll get there in a second. You guys take responsibility for what you get from this class. You guys know the drill. Follow your own trading plan. Now, what I'm talking about is the optimism that carried over from Tuesday. A little bit of a gap down, and we rallied into the close. Today we gapped up, and we kind of rolled over. Didn't really go anywhere. We're in this bullish holding pattern, and not much movement from last week. I'd say from Monday to Tuesday, right? Monday of last week over the holiday into Tuesday of this week. We've just kind of got this nice little holding pattern. I do believe it is because of the CPI that is coming up tomorrow. Real quick, how did we finish? Well, you can see the Dow, the S&P, and the NASDAQ were pretty much flat. The SPY, this does this very randomly sometimes, or I should say not very often, but 0.00%. It was actually down 0.17 as far as the points go, which didn't even register as a tenth of a percent, obviously. So completely flat. Take a look at how they closed. You can see intraday that everything just kind of sold off, and I truly believe that has to do with some people don't want to be as exposed in the markets going into that Fed number tomorrow, although it is leaning towards the optimistic side. The big winner, I'll tell you today, was the cryptos. All the cryptos across the board were moving higher. That kind of leads me to believe that the expectations are for a weaker CPI. Now, follow me on this, folks. A weaker CPI, which relates to a Fed that does not increase interest rates, which relates to a weaker dollar. So let's move it out of safety and into the risk on, which would be the cryptos. All right, see, that's three removed, or 3 steps to Kevin Bacon, if you guys have ever played that game. Let's get a little bit deeper here on the chart. The SPY, this is the holding pattern that I'm referring to, right up in this area. And it really wasn't until, and I talked about this last week, I believe, when we had this big move up here that kind of broke above both moving averages in a matter of a couple of days. Really switched me from, hey, this could be a bearish retracement or revisiting the higher Bollinger Band, super bearish to, whoa, bear's kind of off the table for now. Now, I'm not completely bullish yet, but this holding pattern is holding. It's going to take, I believe, quite a bit of pessimism and worry to knock that off of where it's at. These markets have been wanting to be bullish for a while, and they're starting to see that in some of the economic numbers, along with some of what the Fed has been doing, and we'll see what he's going to do, or what they are going to do tomorrow. So it's that little bit of a holding pattern. Not much to trade, to tell you the truth. The Qs are in the exact same thing. Let me go ahead and pull it square up. Very difficult to kind of trade here. This had a beautiful breakout the end of March, popped up this nice little ascending triangle pattern. And if you're sideways to up, you're doing pretty good. Now, folks, if you've been doing straight bullish trades in most of the technology and communication services, you should be doing pretty good by now, even with this kind of pullback or consolidation. So it's not bearish at all. I don't see anything super bearish, and I'm actually looking for stuff that's bearish, guys. I really am, and I'm just not seeing it. Now, overall, in the heat map, it's participation across the whole board here. Energy has something that's been really lacking. In fact, one of my trades today I'm going to show you is on the energy sector, something sideways. But you guys could see that it's not really getting sold off into, in fact, it's actually popped up a little higher. We did see OPEC do a little bit of spigot tightening, or some fun, I should say, when it comes to oil. And it didn't really have too big of an impact across the whole energy sector. We saw some massive weakness in industrials and basic materials. And you guys can see that they're actually participating in a little bit of bullish action, at least for today. What is weak? Look at the technology, consumer cyclicals. Well, I'm just looking at Amazon, Microsoft, Apple, and that's to be expected. These things aren't falling apart; they're just pulling back. So it's pretty interesting to see things coming off the bottom. Things that are super high are pulling back. It's all more of a bullish action than anything being picked on, any specific sector being favored or picked on. So where does that put me? And I'm telling you guys, I'm a little bit more reluctant. I should be at a +2, to tell you the truth, on that monthly outlook. But I'm going to keep it as a +1. We got the CPI coming out tomorrow. Yeah, I know I don't do my top-down scoring when it comes to any sort of events. I shouldn't. but I'm hesitant when it comes to my weekly outlooks. I truly think that I'd probably be at a +2 on the weekly or a +2 on the monthly. I don't know which one, depending on what was coming up. Now, we are also getting into earnings season, and I truly think it's going to be a very interesting earnings season as well. I'll talk more on that here in the next, when we do the follow-up slide. But first, I want to take a look at a few trades. I decided to go across the gamut, and there's 2 of each that I like. I wanted to do 2 bulls, 2 bears, 2 sideways. They're not the greatest, and when it comes to potential trades, they're not really triggering. But since I get to do this on Tuesdays, I don't really have a choice. I might have triggered into it yesterday. I might trigger into it tomorrow or maybe Thursday or Friday. But hey, this is what is on my docket and what I'm looking at for the rest of this week. This is TTD. Oh, by the way, these have come across the board a couple of times, whether they've been our end-of-day posts or our weekend class or our midweek. I do love this as an ascending triangle pattern. I still like it. I like the action that it had on Thursday, I should say, because we had that holiday. Nice green candle. It had gapped down, but it came all the way back up to close back above that $60 level. Continued that yesterday. Hesitating today because of maybe that number. But I still like this as a nice slow burn or grind up to that 65. So the diagonal call spread is definitely where I'm leaning on that. X-ray was a trade that we had from 2 weeks ago's class that I believe, I don't know if we got out of this one yet or not. Check last week's class because we're talking about it. And here we are once again. It's doing another breakout today. Breaking out of that $40 mark. So if you guys are looking into trying to catch this as it moves, great opportunity. I wouldn't be too afraid to maybe put something on diagonal. We have seen the healthcare sector as of the last week or so, become one of the strongest, and it really is pushing up some of these stocks, and this one's actually kind of leading the way. So I do like it again as a diagonal spread. I know it's breaking out. This is something I don't want to chase. Something sideways to up would be kind of nice. Those are my bulls. Here's my sideways stuff. Now this is energy, and it's hanging in there. I like this as a butterfly spread right around the 85 level. You can see it's just this little area of consolidation that I'm focused on. But let me see if I can get my line straight. Oh, that's pretty straight right there. Okay. So maybe, see, 85 is a little bit low. It's down here. The other one that I'm debating with, folks, is going to be an 80, and this is going to be wide, an 80, 90, 100, or 85, which is right here, 90, 95. And I'll probably end up doing the $5 increments shorter term, meaning expiration cycle of the 21st, which is about a week and a half away. That seems a little bit more feasible, a little bit more giving it the glass half full approach. It has, let me erase these lines, it has just kind of stalled out just above the 50-day. It's not like it's climbing higher up to 90, which I would like to see it with the targeted butterfly. But the reason why I'm a little bit reluctant to choose the 85 strike is because it actually has to drop about $1, right? $1.50 to get down to that. Maybe revisit this 84. So choice is yours. Obviously you guys can hear in my voice or how I'm talking that the jury's still out for me on which one I'm going to choose. PayPal is another one. We talked about this again over the weekend class, but I like how it gapped up and it came back down. I had PayPal as a bear. I never took it because it never triggered, but then it came back up as a sideways. This is my triggering point for bear. It has done this stuff before where it likes to gap up and come back down. This was just kind of a shooting star. But here's one where it closed high, gapped up, and came right back down. It looks like it's trying to do that again. So this gets beat down pretty often when it pokes its head up too high. I wonder if there's people taking profits at this area trying to get out of it. So I'm still glass half empty on this. However, there's some pretty good support at this area, at this level. So it just depends on, are you comfortable doing a butterfly for the next week, week and a half, or do you just, if you're with me, you kind of wait and see if it's going to bleed down with some bad news and play it to the bear side. Once again, that's why I told you it's kind of a bummer to do it on a day where nothing's really triggering for me, but I might be doing something bearish on this come Thursday or Friday. We'll see what happens with that CPI number as well, if that can help it. Speaking of bears, ADP, it's been all over our bear watch. We've done this a few times. We've got a lot of bearish trades on this that have done pretty well. A lot of you guys have done it when it comes to sideways to down. And it looks like After a little bit of a hiccup here, it's ready to do more sideways to down. I've never traded this with straight puts. I've often tried to, but it's expensive. So diagonal spread, calendar spread, targeted butterfly spreads are actually pretty cool. I had some success with targeted butterfly to the downside. What ended up happening is I didn't get to it fast enough to take profits. So it does move. It is volatile. I did zoom out on this chart. This isn't as zoomed in, if you guys would notice, as the ones that we've seen, because I want you guys to look back to areas that it's been here last year in July. So it's kind of approaching those areas. It's still about a $5 move from where it's at, 215 to 210, and you can make money in that. So even though this is super volatile stock, I don't want anybody to try to shoot for 190 anytime soon, because it does have support at 200 and again, or excuse me, at 210 and again at 200. So be aware of that. The other one here is BXMT. It's just bleeding over. This would be something like a straight put. It's affordable. It'll be kind of neat. Just throw it out there. See if it can bleed lower. Snap a Fibbo on that. That's how I target. I like to target using Fibonacci's if I'm doing straight calls and puts. It makes things easier. Give yourself some time. I would go out to May. And to be honest, folks, I haven't even pulled up the chain on this. So I don't know if it's got weeklies or not. But this is something that I'd be kind with a straight put. All right, there's my 2 cents. Hopefully you guys can take those for what they are. The CPI is due out tomorrow, and we're in this very interesting market. The markets have been proved right. They prove right that the Fed might be overreacting and super hawkish, and you know what? The Fed's doing what they do, but the numbers are starting to show that the Fed could reduce. The Fed actually did raise less than expected and also said, hey, there's a 50-50 chance we won't do it in May. We're seeing the employment number go correct. We're seeing jobs, well, the jobs was a little higher going into the holiday. But nonetheless, if this CPI comes in lower than expected, I don't think the Fed does anything. And I think it's going to be met with celebration. I think the markets are going to get excited, and it's going to surge higher, and all those people on the sideline that got out today maybe are going to get right back in, and we're going to see a push to the upside. However, there's the next bullet point. We got bad news was good news. Now we're going to have bad news could now simply just be bad news. If we start to see, okay, cool, well, things are starting to recede. Well, that's great for stopping to increase interest rates. How? Now what else is going to recede? Uh-oh. Guess what's coming up, guys, in full swing the end of this week and into next? Earnings season. Some of the bigger banks will start here at the end of this week and into next. So we're going to see if all of a sudden investors start to look at, hey, we told you so, now we're up here, this euphoric market turns into, uh-oh, what did I just buy? Do I have to evaluate the company I own? What if they miss their numbers? What if they're not going to give the dividend they used to? So it's back to business as usual. And we're going to. It'll be interesting to see when that rears its head. So, economic-wise, the weak CPI greatly reduced the likeliness of the Fed hike. I truly think it's met with applause and these markets surge. But for how long? I don't know. We might get that little bit of a blow off top before we get a market of like, okay, now what? Picking up later this week, earnings. Keep that in mind. Check your potential trades. I didn't see anything for today that really jumped at me, but later on this week and especially into next, we're going to start to see these pick up. All right, guys, thanks so much for joining me, and we'll talk to you next time. Bye, folks.